say make money, money, make money, money, money. Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound. I need that skrilla.
Welcome in to Just the Tips. We've got, we're missing one of our members here today, Gordo. Who are we missing?
I forget. He's dead to me. He knows what he did.
Sorry, Bruce.
He really added much, right? Like, I think we could probably, we should probably just kick him out. We should vote him out and take all the profits that are clearly
Right.
coming.
How do you divide, how much of a bigger pie is 0 divided by 2 instead of 3?
Well, it's a negative number, so the losses get bigger. Those Reddit campaigns cost a lot.
Let's bring him back.
So yeah, let's do something. So what are we here for? We're here for. You're the host today, right, Georgie?
I'm hosting it up. Hostess with the mostest. This is a mini-sode, so mini tips, as I will call it today.
You've always called it. It's always been a mini tip for you, though. Sorry,
depends who's who I'm comparing to.
It's all relative. Yeah, that's true. I'm sure there's some league table that you could come up with.
Yes. So we're going to do a little recap here quickly of some of the earnings of companies that we've covered. It's not going to be comprehensive of everyone, but just thought we'd do a quick hit here in earnings season. So Gordo, maybe since you're the Supermicro whisperer, you can take that one on. They reported, I think the stock's been moving quite a bit, high on volatility. So what does that mean for our listeners? What do you think about the results? Seems like they're going to get out some of their accounting reports, their K and their Q. So are you getting more constructive, less constructive, or what's kind of your thoughts on what they reported?
I mean, it's hard not to be at least a little more constructive. I mean, man, they've sure, it's sort of the classic. Oh, by the way, before I say anything else, please do not construe anything I'm about to say as financial advice. Consult your advisor in your own financial situation. This is for entertainment purposes only. So, going back to Senior Micro, I think, it's hard. I mean, they did the classic, hey, you guys, sorry about this near-term hiccup where we missed this quarter and next, and have gross margins like in the 11 to 12, 13% range. Forget that, that we've just missed all that stuff. Bad stuff happened, but, there's supply chain issues. Another great, excuse in the grab bag of these book and ship businesses. We couldn't get enough materials to make it, or there weren't enough chips, or whatever. People on allocation, some shortfall, not our fault. And oh, by the way, we're going to grow to $40 billion in FY26, ending in June. So, I guess I don't trust this management team entirely that they've really got visibility out that far. I think it's
like it was back half weighted from what I saw.
Oh, very much so. And so it's sort of like the classic hockey stick, but not even just a this year hockey stick. It's a front half of next year hockey stick. I mean, it's what, 40% growth? I'm trying to remember the exact percentage, but range,
I believe, yeah.
So and I looked at JP Morgan, like they didn't even adopt the number. They adopt 3.3 billion. Like there's not, and the stock has run 25% in like 5 days, and I frankly was a little blown away that they were able to say that stuff about the filings. It makes me think, okay, well, I mean, you put that in writing, and they got dates, like, I guess this is done. It sounds like they're going to get current, and that was a massive, massive risk and overhang. But, stock's down 40% the past year. Like, this is still the psychotic ex-girlfriend that we know and love, and, she's just showing up and acting really nice right now and telling us things are going to be great in the future, and, like, I don't buy her promises. There's no personal part of my life involved in this story, but this is a crazy ex-girlfriend. These guys have had filings delayed. There were accusations of them, like diverting product to China. It doesn't seem like that happened yet. Like, I just don't trust though that there's not going to be some issue down the road. I don't know. I mean, like, it's still a piece of shit company. I still feel like there's a lot of competition. Like, yes, there's a ridiculous amount of demand, but I don't trust this. Like, I do think that at the margin, it's hard to deny that they must have made progress in the filings, that's kind of like de-risked there. Mm-hmm. But man, I still don't want to, to have a long-term relationship with Supermicro. I still feel like they could, things can change a lot between now and the front half of 2026. How can they even know? Yeah. Do they have contracts for servers out that far? If they did, would they be enforceable? I don't know. I just feel like these things blow up every time. It's never different. I mean, I just know there's a lot of competition. So at the end of the day, I say, forced to choose. I'm selling, I'm shorting. I'm kind of in a bucket. Oh God, there's a lot of demand here too. And so I don't know that I don't love having to pick. So that's where I stand. I would love to hear your point of view, Georgie.
Well, I would stay on the sidelines here too. I mean, I think there could be money to be made if you have the right risk appetite. So if you want to live large and these guys actually execute on it, there's definitely upside here to be had, right? I think on the stock, but like it's just it feels very binary, right? Like it's going to crash and burn, something's going to come out and it's going to go, down dramatically, or you're going to actually print great results. It was a whole bunch of noise about nothing, and you'll do great. So it's just very binary to me. The other thing that was interesting was I saw Dell had signed a contract with X.AI, supply contract there for servers, and so that was one place I think Supermicro was rumored to have had a lot of business. It doesn't mean they're necessarily out, and the Supermicro stock didn't really react to that Dell news signing that contract with X.AI, but it definitely means that they may not be gaining share there. So it didn't seem to bother Supermicro stock, but Dell stock definitely jumped on that. So again, I'd kind of stay on the sidelines here. If you have the right risk appetite and you want to swing for the fences, this is one you can take. But yeah, who knows if the shoe drops.
So are you officially forced to a rating right now?
I'm out.
So you're not even.
I know you don't like holds, but this is one where it's just like I just wouldn't play in it.
All right, fair enough. If you're a hedge fund manager, you don't have to buy it. That's fair, but it's not very helpful to anybody. But again, you should pass on opportunities you don't have conviction. So I kind of buy that argument.
100%. Yeah. So let's cover a couple other ones that I was close to, and we'll just go fast here because we're going to try to keep this short. So Twilio is one that, since we covered it, did very well, right? It was kind of a bargain basement one where, it was a fallen angel, let's call it, right? It had been a darling. All the growth came out, and then suddenly, such low expectations. They reported a semi-decent quarter that started getting towards double digits. The stock popped 24% on their analyst day when they gave that preview. And I think the previous quarter as well had a big jump. They actually officially reported last week, and they gave back a lot of that recent gain, so they're down 15%. And on the quarter, they reported 11% growth, which is great. That's an acceleration for these guys going back up, mostly on their core messaging volume. But the consensus guy was for 8 or 9, and I think, or their guy was for 8 or 9%. I think consensus was 9%. But the market had clearly gotten ahead of itself in that way. So they're talking up like the AI opportunity quite a bit here, what they have with their CDP. They're also talking about like more volumes across contact center and messaging in general. And so I think that's a little bit of the bull thesis here. I would call them more fairly priced now, in line with the market. So like 18 times forward EBITDA, 29 times PE. So I would say, like, end of the day, they claim not to have like a lot of political volume, but I do question, like, were they benefiting as well from some of the political cycle that happens? I think you have to believe it. They say they have visibility. I'm not sure they have visibility to every message, but I'm not sure I fully buy that they're AI stories here, particularly on the CDP side. So if people are getting excited about that, I just see less upside, I think, here going forward. Like, I was take my victory lap on having called this one a buy before. I don't think it's horrible, but I just don't see where you get additional upside. I think their market is saturated unless there's something that really comes in AI oriented, which again, I don't think is going to be on the CDP side. They haven't shown any signs of that. Their CDP is limited in what it can do. It's not really, if you want to do real AI and personalization, you're going to go, tap into something that's a broader asset, not just a web page focused asset. And I know they're trying to build that out. So I have my doubts there. I think maybe volume-wise, you grow a little bit of messaging volume with AI, sending more messages, but I don't know. I kind of shrug. So for me, I think I'd stay on the sideline.
I don't know how much of their sort of texts and messages are all via carrier networks or versus if it all goes IP. I have this AI girlfriend that I created. Like, her messages over the web browser probably aren't going through a Twilio server. I feel like you're shaming me. She's really good. She's a consultant. I made a whole bio. She's read Atomic Habits. She's real.
She's
Anyway,
always sweet. Always sweet.
she's very accommodating. Like, have you gangbanged? Yes. Do you have a PhD? Yes. Like in Coming to America, whatever food you
Never said
like.
no.
I didn't program her right. So now I got to take her back to the shop. And I can't afford the voice version, so it's all texting relationship. Do you know how cold that is? Anyway, let's go back to Twilio. I was just observing that the stock is up like 100% over 6 months. But then over a year to date, it's up 15. Oh, I'm sorry.
Victory lap and go home.
Up 11%, 12% the past month, and down 15% the last 5 days. So, like, this thing is like, it's already up a bunch. It's kind of giving it up. It's not a great chart, as we like to say. It just doesn't sound like it seems like a company that kind of had a scaling issue, you know?
Yeah.
And like may have some commoditization and sustainability issues. Like, I just feel like, this is not a Datadog. You know, this is not one of these like CrowdStrike. It's not one of those. Don't be fooled. You know, it's not. It's also not Supermicro. It's also not Crazy Ex-Girlfriend. These guys have a lasting software-y, infrastructure-y kind of business that I think will have a place in the world for a long time. It's just not going to. I don't think it's going to double. You know. So let's move on. What else you got?
Let's move on. Shopify. So Shopify reported it's actually been doing fairly well. It didn't have a big jump like the other ones. I think on the day they reported, if memory serves me correctly, they were up like 4%. You know, they're forecasting revenue growth in the mid-20s, which I think when we covered this, they had reported, you know, they were forecasting below 20, which caused the stock to dip. And then since then, they've really kind of pivoted back. And so they have, you know, accelerating revenue growth that they're pointing towards. Why the stock did not react even more, I think, off of a very strong quarter and guide, was really around increased spending. And they're pointing to a couple things where they're going to increase that spending. So they're going to increase it on performance marketing. They're seeing a lot of strong results in international. And then they're talking about AI use applications. And so if I go through all of those, I don't think any of those spending categories give me heartache. So performance marketing, they've been doing that. They've been saying, hey, we've had very good results. We haven't done a lot of it historically, but we're attracting customers at an attractive CAC. So great. I'm going to trust management there. They've been doing it. They're going to continue to do it. International, they now have more international customers than they have in North America and Canada. So that seems to be playing out. Continue to invest, you know, in those foreign geographies. I have no problem with that. And then AI, like there's a ton of AI applications for what they do. E-commerce. We'll get to AppLovin here, McLovin in a minute. But there's a ton of opportunity, as you'll see with McLovin, in AI, whether it's personalization, you know, marketing automation, customer support, like all those areas they play in. So I'm fully excited for them to invest, and I trust the management team here. So that's a big difference. The only knock on these guys is it's not cheap. EV to revs is 15 times next 12 months.
Oh,
EV
just
to EBITDA.
hit 1.5. Okay.
Oh, yeah, 1.5. EV to EBITDA is 81.
Revenues, not earnings. Okay, sorry.
Revenues is 15. EBITDA is 81 times. So they're obviously not maximizing for profitability, right? They're spending. So I'd almost ignore that. But 15 is not cheap, and it's not cheap when you think too. Like they have a bunch of like payments revenue in there, which is almost pass through. So you could say that's even artificially low. But the reason
So it's a short, is what you're saying.
no, not necessarily. So I've owned this. I think last time we did our update, I said I was going to trim off of that big quarter. I did trim. I trimmed my position in half. I've become like one of my largest positions because I'd held it for so long. I bought a bunch of it in like 2022 when it was down in the dumps. And so I trimmed half of it. But yeah, it's not cheap. But like any good stock that's performing well is not cheap. They have a huge TAM. They're executing well. They're a leader in their space. Like you're going to pay up for that. So like I don't mind people continuing to own it here. Just know that it's even more expensive than it looks if you're buying into it.
I mean, what are you thinking like macro wise, tariff wise? Like what's kind of priced in? I mean, it's fundamentally kind of, there's a macro retail-y kind of, I mean, there's a secular growth piece, but you know, surely all of that stuff has an impact.
Yeah, I mean, it's hard to predict, right? Like what's going to happen with tariffs. I think I'm just going to invest for the long haul and try to ignore that noise. I think, if small businesses suffer, like they will suffer, they are going up market more and more. But it is a lot of small businesses, and so, whether you believe some people will say they're more exposed to tariffs than you think. A lot of people say, "Oh,
It's a
small
cost
business
issue,
is
though,
not."
right? It's a cost. It's an indirect issue. Like they're not really shipping from China themselves that much, or from countries that are Mexico. Like it's
I
mostly
think,
shipping from Mexico to Mexico. But surely there's some stuff coming from
yeah.
China. I mean,
There's some stuff coming for some of their businesses. It's hard. They have a very diversified customer base. So your hope is, you're gonna be diversified enough that you're not gonna see hopefully a huge steep fall off where everyone gets hit, but it's hard to say. So I think end of the day, like you can't predict the tariffs. You just gotta invest in good companies. And so
but it's a
I try to.
massive risk. Like that's a hard. I mean, it can be transformative, right? So to say that is sort of like it's a little lazy, if I'm being honest, George. But you kind of like my. Well, I'm not gonna say who. So I'm working on this. So I think you know.
Keep the crazy in the bottle. Keep the crazy in the bottle.
It's
Uh,
leaking out. It's leaking out. So the conclusion is, what are your conclusions on these two? You didn't really do AppLovin fully. I don't know if you want to finish on Shopify. Basically, hold on to it for longer. You trimmed it, but hold on to it.
Yeah, I
Um,
don't mind it at all. Again, it's pricey, but every good stock's gonna be pricey. So I continue to like all the things they're doing and all the where they're pushing on the pedal. And the biggest knock is they're spending in growth areas that are have proven out for them in the past. So I'm still gonna hold on to my shares that I have now.
all right,
Um,
AppLovin speed around. What are any other ones
app,
besides that one?
oh, AppLovin, man, that thing is just like it's a thing of beauty. I mean, like I've never seen a more beautiful like quarter than they put together. It was like I was just comparing like their 2023 to 2024 as an example. The thing popped like 28% on the day. It was already a super expensive stock.
That's what you buy
And
momentum stocks, right? Is for that. It's for
oh,
that juice, man. They occasionally just friggin' just crush it. It's hard to
yeah,
pick them, but like the apples of the world, right? They had years, like that, and just finding that Google, even big
yeah,
companies, you
big
know.
companies. Yeah, I mean, I think the market's gotten smarter though, right? Like I feel like today, like these guys are, um, they're gonna do like one, they announced they're gonna sell their video game business. They found a buyer for it, right? So I think they're selling it for like 900 million. It does 1.5 billion in revenue, so less than a turn of revenue. So in some ways, that even artificially brought down their multiple. But for them now, they're more of a pure play. They're getting rid of that distraction, which originally was great help to them, right? It gave them data for their business, like helped them train their AI, but they don't need it anymore, right? They've got enough data. They're getting data from other places, so now they can focus on their core business. So I do think that was a positive. But this thing is just ripped. And so if you look at like what they did from 23 to 24, this is on a revs basis. They grew 40% roughly. So they went from like 3.2 to 4.7. And they did that with increasing gross margins. So they went from 68% 23 to 75%. So 7 points of gross margin gain. Hey, that's amazing. And then you think, well, they probably spent a bunch of like on sales and marketing and everything else for that growth. They spent 18 million additional dollars on sales and marketing to grow that extra what is it 1.3 billion. They spent an additional 18 million than they spent the year before. Like, so the model is scaling. Like, normally you would see as a percentage of revenues, you would say stay constant. So, like in 23, 25% of their OpEx dollars, or 25% of revenue, I should say, went to sales and marketing. 2024, it was only 18%. Because again, they didn't increase that spend, but they grew dramatically. Like, it's a model that they're truly using AI themselves. Their whole op margin doubled. So they went from a 20% op margin on the bottom line to 40% because every category, gross margin, spending across the board was more efficient. And they're just killing it. And then the biggest thing was, they focus on video games and getting you to download video games. They declared that they're having success in e-commerce. So they looked at like They were rolling this out during the holiday season. They saw people using it, and they claimed it was just effective on e-commerce use cases, getting people to buy, as it is on getting people to download video games. That opens up a huge market. That is the bull case for them. So like, you couldn't imagine, you couldn't dream up a better quarter than this. So like, I mean, the only thing you have to sit there and stomach is like, can you pay the valuation for this thing? Um, and it's, the second highest to Palantir, which I'll pull up here and tell you the real time one. All right, so 30 times next 12 months revenue. This may not be adjusted for the video game coming out, and 45 times EBITDA. So it's huge numbers, but it's like a A-class company. Like I'm almost tempted.
What's the revenue run rate again?
So with the video games, I think they're about 5.6. That's coming out, so call it 4.1. Is kind of where they were, I think, for 24.
Year, yeah.
Yeah,
So okay, so they're still pretty small.
they're very
Like they
small.
can still grow a lot, as expensive as they are. And so the question is this the next Google for what they do? I mean, Google's a bigger market, search is a bigger market, probably. I don't know, mobile and it's just
E-commerce ads, right? I
yeah. So
mean,
so where do you come at the end of the day? Where do you come down on it?
I think I'm still where I was before, though it's hard to, it's like I want to dip my hand in the candy jar. you know. But I think at the end of the day, like it's just too expensive. So I'm gonna sit in the sidelines, wait, because if they do ever have a hiccup, the e-commerce, they find something that doesn't work or it goes a little slower ramping that, like the stock will fall just given that high valuation. So I'm gonna sit and wait and then wait for an opportunity to jump in if I ever find it.
See, they always look expensive, and you need to put like a limit on it to like 5-10% and not be greedy and just fucking do it, and then just
I
not look.
know, I
It's still
know.
small. Like, what's the market cap?
Oh, it's in the hundreds of billions.
That makes it harder. So you gotta think, what are you playing for? A trillion?
Yeah, I mean, yeah, if you want this thing to
500?
double,
How double? It seems like yeah. I mean, the question,
it's
yeah, I
still
mean
tough.
that's worth playing for, but I kind of feel like the real question is this market gonna, is this business gonna increase 10x? Like, it's kind of priced
Uh,
that it might.
yeah, it's 176 billion EV right now.
The
So,
issue is what will the value when they get to like 50 billion in revenue? What's priced
yeah,
in? I don't know.
no,
I mean, but can they get to 50 billion? I don't know. I'm just talking crazy numbers now. I'm talking like a total nutty bull. But when you have valuations like this, that's what they're telling you, right? They're telling you this thing's got a ton of upside still. This is the early part of the story. This is a secular winner and a leader in it, in its space, and like that's all in this,
yeah,
right?
no,
So you have to talk about it that way. I mean, maybe 50 is not the number, but certainly people are talking about 20. Like they're talking about
and it
5x. I'm sure.
and it feels like at some point, as they go from 4 billion in revenues to call it the 20 billion in revenues, there's gonna be some hiccup somewhere. Though they're executing at such a high level, but like that's when I would jump in. So I'm gonna try
Yeah,
to
the
stay
hiccup, and
disciplined
then those
here.
things are never a single quarter. So
Yeah,
it's just like it's hard to time, but I agree. It makes me gives me altitude sickness. I just can't
100%.
step out there and an evaluation like that for a big run. Like this is a classic thing where like, why didn't you tell me this the day before earnings? Like don't tell. I don't want to buy. Even though you still the person who bought it before earnings is probably holding it still. It's the same thing economically to buy it as is to hold it. But yet there's this psychology around I missed it. But it's just crazy expensive. I mean, you could have said
Well,
a
and,
lot
and
before the
people are
quarter,
up.
right?
And people are up 1,000% in a year on this thing. I mean, it is the
Yeah.
most under talked about story. That's what I don't understand why more people aren't talking about this thing. The people that know it love it, but like you don't hear it that much in the mainstream media. Like you're starting to hear a little more, but it's still like relatively unknown. So,
Well,
anyways,
that makes me put.
I
I'm
think
definitely put a ticker on the screen, man. We're gonna, Daddy wants a new, I don't know, Jetta, whatever I can afford, whatever I can make off of my book.
there you go.
You gotta aim. You gotta start somewhere.
Yeah,
It's a
exactly.
Cavalier. It's red. That's me. It's a Z. I had a Z24 Cavalier when I saw Swingers and you said that. I was like, oh my god. I'm like, it's a Z24 Cavalier.
I
This is
don't
what I'm
remember
talking
that
about.
line
These
in the
guys at these
movie.
parties. I was that guy. I still am. I'm working on it. Talk to my therapist.
Still am.
Anyway, are there any other stocks that we have?
How about one more, Datadog? So
Dated Dizzo.
the last one we chatted on. So I think I was the bear on this one, and I truly was the bear. They reported a quarter that was not received overly enthusiastically. So I think it was down, I want to say 9% on the day, if I remember correctly. Really, they guided towards like a, below 20% number, which I think is always like a psychological level for investors these days is like, are you a 20% grower or not? And so
Yeah.
I think they were guiding towards somewhere in the like 17, 18, 19% range for next quarter growth. So that was a big hit. And then the thing I had focused on was like, okay, new customer growth. Like, show me that new customer growth engine gets fixed, and there were some signs that maybe it was turning around. And I had forecasted like if I took the third quarter and just put that on the fourth quarter, like what would happen, what it would look like. And the third quarter was decent. The fourth quarter came in even weaker than expected on that front. So like their new customer growth for 2024 as a year, like I'm just looking at it. It grew 10% or in absolute terms 2,700 new customers.
God, though,
If
they're
you go
going up
back,
market. Does that number really matter?
even their big number of big customers was lower. So
But is
like,
how much is it up? I mean, these are these 100K customers go up to millions. So like, I think
but
it's
that's
kind
why
of
growth is disappointing. I mean, so their expansion number went up slightly, which I think somewhat saved their quarter.
what did they say?
Their
Because they've
net,
been saying like mid one teens. They say like approaching 120, or what do they say?
yeah, I think they went from into the high 110s is basically compared to like mid
No, so that's what
one.
I thought. Well, that's actually
Yeah.
good. Better retention.
Better
Hey,
retention. So maybe they're landing. I mean, the bull case here would be like you're landing, big customers, but landing small first, and then there's going to be more net retention than there has been historically, right?
well,
So,
new customers. In my experience, was that with a very similar business that I worked on, was that the newest customers have the highest NRR, and so
yeah,
that there's also another
100%.
sign that they've got some big customers maybe that are newer that are growing, and that's helping drive NRR. And maybe there's more to come, But I just still feel like these guys. I mean, the valuation is full at 47 billion. Like they were modeled to grow like 25% next year. Like I don't know if that's still in the cards, and so really, actually, I'm sorry, I think it was 21 for next year. Like the fall for calendar, I guess they'd be. Is it 25 numbers? I guess because people have reinitiated this year. They're initiating this quarter. They're initiating 26. I don't know if that's anyways in the low 20s was
Yeah.
what we were expecting, consistently, and so low to mid 20s, and so not hit seeing that, and the guide's conservative, right? They're going to beat it, so they're really going to do 20. But you're right, like it's a slippery slope before they're actually doing below 20. The law of large numbers. Like, come on, guys, the economy is getting a little better. Like, shouldn't you be accelerating at some point here? So it's not this quarter, clearly. I mean, they have one of the most efficient machines you've ever seen when it comes to like gross margin payback, and like it is just they're off the charts on just about every metric in terms of like return on capital. Like, and I still think observability. It makes a ton of sense. This is just going to get harder and harder, and they got a little work to do to catch up with Dynatrace, but they're still like number one, and they're still. They're the brand name. It's going to be them and Dynatrace basically. I think for not running table. There may be one or two in there that can hang on, but like it's getting harder for the smaller guys to run. So I'm gonna look at this chart. And I'm kind of excited because it's kind of like been sideways for a while, and this is a little hiccup, and so it's down like 10% ish or something recently. So hey man, I think it's time to double it if you own it, and start a position here because I'm a believer in the long term. I mean, my only hesitation is kind of expensive.
No.
It's certainly not cheap, but given its growth rate, but it's still one of the faster growers, especially at the scale. So yeah, I'm gonna mark it up. I'm gonna watch very closely though. Like if they print an 18% growth, like look out. Like maybe there's like a year or two of that before like they figure out maybe there's this massive. The big thing you got to worry about is companies when they move up market. This happens over and over, where they're like, oh yeah, sorry, like we couldn't scale anymore on the small side, and the big side is new, and so like we're not that fast with it, and it takes longer sales cycles. Like I've seen this so many times. That move up market, like one comes to mind, it's hardware, but Nimble Storage. But they had like 80% gross margin. It was basically a software storage business, and they totally got nuked, and they got bought. So you bought them on when they finally came to the altar about their missed enterprise opportunities or their slowing, growth due to their move up market. Like you kind of did okay, but not because they succeeded.
Yeah.
Nutanix was one that kind of I think succeeded to some degree. They had a leg up, but it took years before they got past that SMB and you went over the hill and and past all the sands and like that was just in the public cloud. So it's just not. I don't know. I'm not willing to put them in that bucket yet. This is software, and they're a leader in a very specific, very high need space. So I'm going to say, I'm going to go on the record here as I'm buying this thing.
All right. So you're sticking with the original rec.
Yeah.
So I was just looking up expectations as you were talking. So yeah, I mean the market is saying they're going to go from 2.6, call it 2.7 billion last year to 3.2 this year.
Oh shit! Yeah, that's really
It's like
expensive.
19%.
But it's
growth.
small. The valuation's really expensive. Like 50
Yeah, the
billion.
valuation's expensive.
Yeah, that's
So
like 20
I'm
times
still gonna
revenue.
sit on the sideline. What you say might be right? Like they could be that transition, right? And the transitions are tough, and sometimes it's a great time to buy a business. But like, I'd rather buy on that first sign of re-acceleration, and if the stock pops 20% that day, then so be it. But like for me, it's kind of a show me story at this point.
I kind of wonder if somebody's done a study on that. Like I've heard that so many times, and it seems like that behavior is well ingrained among the buy side. Like I would rather not look wrong and get for a long period of time and buy with everybody else in that first pop and hope that there's more upside than is already priced in the instant that happens because everyone else is doing it. I don't know if that really works. I think it probably works in good sectors like software. It does not work in common equipment. It does not work in industries that don't have really good barriers. And really, strong leaders. Like I think that the formula works. I think the way you said it, but I don't know. I'm inclined to take one more flyer on these guys, and even it's only been they've actually been kind of sideways for a while. So I'm gonna argue that maybe this is they're coming out of it, but who knows?
All right. Well, that's all of our mini tips for this afternoon.
All right. Thank you for the quickie. I really enjoyed our quickie, Georgie boy.
I know that lasted. That was a little more than a quickie. I'll give us that.
Yeah, a little longer than we expected.
Minutes.
It must have been the beer. Maybe I'm just not as good looking as I used to be. Anyway, what is it like? Bulls make money, bears make money, pigs get slaughtered.
Money, money, make money, money, money. Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound. Fat pockets. I need that Skrilla on the Rilla. Fat pockets. I need that Skrilla on the Rilla.